All right, well, welcome everybody to today's client support webinar. Happy holidays to everybody, and of course, Happy New Year as well. And hope everybody's having a good time and a safe time as well with their families. And of course, I always like to say our next client support will be next year, so I'll see you next year, right? All right, so let me go through my administrational items before I get going. Just somebody out there, let me know you can hear me okay. You'll see me look up. I got the webcam on, so I'm testing that kind of today. I'm going to be looking up, and I have a monitor above me, so that's kind of what I'm looking at. I'm not just kind of gazing out into the stars, so to speak. All right, so this will be recorded, and the recording will be posted on YouTube in our hidden area, our unlisted area, because we like to keep these private. And if you have any questions, feel free to start typing those in. All right, and hopefully everything is working on our end so you can see us good. All right, let me just go through some of the quick things I have to do when I do a webinar. And one of the first things I have to do is talk about the risks involved in trading, and to let you know that past performance doesn't guarantee future performance when trading the markets. Also, we work in a realm of probabilities. So we lose, okay? We do lose sometimes, and you have to protect your downside, and that's where risk control comes into play. I've written two really good books on how to handle that, but you also need to trade with money you can afford to risk, called risk capital. And then also too, if we look at stocks today, or I present an idea, please run those by your financial advisor or whoever manages your money to be sure what we're talking about here is suitable for you, and things like your age and risk tolerance. So we want to make sure they're appropriate for you, and your financial advisor, of course, knows you personally. I don't, so always check with them on things like that before actually implementing real money into a concept or a trade. And then finally, also realize that in trading the financial markets, again, you have to, there's certain types of risks. One type of risk we control by actually funding our account with money you can afford to risk. But the other type of risk that we try to control is called the trade risk. And this is where we teach you how to calculate your trade size or position size on each and every trade in relation to your stop or your exit, also known in the industry as, and also to your risk to reward. Where's the profit target zone? So you need to be able to calculate those types of things as well. And I've got two great books that help you in that area. One's called The Trader's Money Management System, and that's the book on the far left, which is a comprehensive deep dive into risk control and money management. And then my newest book, second from the right, called Money Management for Traders, deals specifically about how to implement it into a trading rule program. So you may want to check that out as well. All these are available at Amazon, and we have links available on our website for access. If you go under, I believe it's education and then books, it'll take you right to it. Also too, I have Elliott Wave Techniques Simplified, published by McGraw-Hill, and that course covers everything you need to know about the Elliott Wave, which is a form of technical analysis which designs basically proportions waves with numbers and letters for retracements. And then I have the Survival Guide for Traders, which is a book that delves into how to run your trading business right from your home using today's technology. Book on the far right, my newest book, The Art of Trading, coming out in 2024, is going to be probably, I think, the best book I've ever written. A lot of good concepts in that. You know, I thought I was going to have it out in 2023, but I keep adding material to it. So my publisher says I got to finish it now in 2024, so it will be out in 2024. All right, probably the mid to latter half of 24, but we'll get it out there. But I think it's going to be the best book I've ever written. So you can pre-order those as well. All right, when we talk about stocks here or markets that you want to look at, you know, we have our trading software. Many of you already own this. You can buy it a la carte. You can buy it as a bundle. We have sometimes some holiday specials that you can take advantage of. But you have to be on our mailing list for that. So definitely check that out. We have charting software, scanning software, risk control software. We try to cover the whole gamut of tools you need in order to be successful in this business. So that's available for you on our website as well. And we also have a dedicated website called appliedrealitytrading.com. hypotheticalperformanceDisclosure.com, which we started a couple of years ago, that deals specifically with the software only. So you can definitely check that out. All right, let me come out of here. And any questions that you have right now, feel free to jump in and talk to me about them, and I'll be able to help you as best as possible. Here is TradeStation, but you know, also we use NinjaTrader. Our software is compatible in NinjaTrader, TradeStation, Multicharts. Multicharts is used by primarily our overseas clients that want access to data that they have for their local markets. We also work on MT4, MT5, and eSignal. So we try to do all the major platforms. There's several others out there, but the issue with those others, of course, is the fact that not many people may be using them enough to make it worthwhile to program for those. So we try to stick with the major platforms to date, okay, just so you know. All right, so let's see if there's anything else coming in terms of questions. Everybody's software working good. Who's using what out there? Who's using Ninja? Who's using TradeStation, Multicharts, whatever software you're using our software on, let me know, okay? And we'll just kind of always interesting to see the spread. It's usually mostly NinjaTrader and TradeStation, and that looks like what it's coming out to today. Okay, good. All right, so listen, today I want to talk to you a little bit about some things that we found in the markets. I'm going to use the whiteboard here, and for those in the day trading room, you can certainly add into this if you want. So what we try to do is when a market sells off, okay, we try to catch the bottom for the next big trend up, right? That's one of my favorite things that I look for. And I usually can scan for this, markets that are making new lows or all-time lows, or markets breaking out of a bracket. You know, that's what the turbo scanner does. So you can scan for that from a technical standpoint. And the other thing, I mean, that's been pretty basic and common knowledge. However, what's kind of interesting, which I've noted, either on an uptrend or a downtrend, let's say you have an uptrend and it's a wave 3, and you know wave 4 is coming, and you may be looking for a possibility to trade wave 4. Now, this becomes an issue, and for my day traders out there that are in my day trading room, you can certainly chime in on this, but this becomes an issue when you are trading a certain time period. Let's say you're trading like 2 or 3 hours during the day, and that's all you can do. But when you pick those 3 hours, you may not be able to get in early. By the time you show up, the market may be up here, right? So you kind of don't want to chase that market. So the next possible trade would be either to try to catch the retracement or wait until the retracement and then catch wave 5, okay? So you've got a couple decisions here. And some people do not like trading the wave 4, and that's fine, okay? But then they wait for the market to retrace and go after wave 5. So one of the things that we have found to increase the accuracy of either trying to catch wave 4 or catch wave 5 is to look for the signs that wave 3 is ending or wave 4 is ending. And you can do that by, you know, the common knowledge of looking for a fib retracement. We look for the owl and so forth. So there's many ways in which we do that using our software. But today I want to discuss something I've talked about before, but now I want to add a little something in here. You know, when you have a wave 3, okay, you have waves inside those waves, okay? And what we try to kind of do is get a handle on this wave count inside wave 3. And if you can count the subwaves in here, that will kind of help you notice when that wave 3 is over by the fact that if you can see the 5 waves inside that wave 3. Now, I'm going to erase this a moment and let's go back to this. Sometimes you get a situation like this and it looks like it's going to end and you think, oh goodness, this is going to be the end of wave 3. I'll trade the wave 4. but you don't really have what I call the final move up or the fifth wave up in the actual wave 3 yet. And if you can't see that well, you can go to a lower time frame. But a lot of times on the time frame you're trading, you can see this, and I call this the hook, okay? And really the hook is nothing more than the smaller wave inside the larger wave on one final push up, all right? So that's the hook. So if you can see the hook and you're getting ready to go short, that's far better doing it that way than if you can only see here, you start to see a pullback. Because if you think this is the top of wave 3 and you don't have a hook, this is probably the hook you're trying to trade, and you think it's going to go down like this and hit wave 4, but instead it's the hook, and it goes back up to complete wave 3, and now you should look for a wave 4 trade. So that hook is a very valuable lesson, I think, that I've learned in my trading to look for before actually going short. Now, there's two other elements to the hook I wanted to cover today. One is simply that usually if you have a situation like this and you have waves 1, 2, 3, 4, and 5, the problem is that when the hook is far away from the top, I have found it's a lower probability because you may still have missed the final hook up here, and this could still be a 3 instead of 3 here. So my point is I like to see the hook fairly close to the top like that, all right, before I'm confident that the wave 3 is over. So I look for a fairly close last hook or gasp for one more high in the market. And so if this is a long move up here, then I'm very skeptical of this wave 3 being over. I like to see one more boom to the upside. Now, what does that mean? Do you always get that? No, but you get it more often, I think, than not. And so therefore you may miss at times. It does sell off sometimes right from there, all right, and you may miss it. But I have also found that I tend to get stopped out more if I don't have a hook. So therefore the hook is kind of a nice thing to wait for because it increases the probability of being able to identify the end of a bullish trend. And this is for bullish or bearish, but in this example, I'm doing it as a bullish. So that's one thing to look for. Now, we talked about that before, but here's kind of an interesting twist in this. All right, if you have the owl, and everybody should have this, all right, what we've also noticed is during wave 3, you have a very bullish owl, okay? And then as it starts to get towards the end, it starts to waver and come down. Now, when you see this waver and come down, a lot of times on this last move up, this hook up, it creates a little bit of what we call a bulb, okay, before it eventually sells off and goes negative. So I guess what you would call that is bearish divergence building inside a wave 3 or a wave 5 or whatever impulsive wave you're looking at. You don't always get it, but when you do get it, the probabilities of this being the end of a wave 3 or wave 1 or wave 5 is significant and increases your probabilities of a successful counter trend trade or trading the retracement for wave 4. So my recommendation here is basically to wait not only for the hook, but if the hook occurs on the bubble, then that's even better, okay? So again, we see this on all time frames. And again, we see this on bullish trends as well as downtrend. So if you get something like a pullback here, one more hook up, and then you get the major sell-off, the owl once again, and I'll just draw this as a line, will look kind of like this, not go negative yet, and then start to go negative here. And there is your bulb right here, okay? And this bulb leads to bearish divergence inside an already bullish owl. So that increases the probability of a successful counter trade. That's what I have found out to be the case. And then of course your target for that will be a fib retracement. The owl should go negative down here, okay, and then start to creep back to the upside when wave 5 reoccurs. And then again, sometimes you can see that hook one last time on C wave, because C wave in a correction, all right, is an impulsive wave. So there are 5 waves inside C wave. So look for the hook, okay? And that's kind of what I wanted to go over today when you see it, because it just increases the probabilities of that move being over. And a lot of times before, when I would go in, even though I thought wave 3 was over, if it didn't have the hook, I would find myself stopped out once or twice before I'd catch it. So it just decreases that stop out, because every time you get stopped out when you're trying to catch a new move, that hurts your return on the new move. And I have found you can survive 2 stop outs and still actually be profitable, but not as much as if you could have hit it right the first time. And if you have 3 stop outs, probably the best you're going to do is break even on the next move if you catch it. So that's kind of, you know, something I wanted to share with you guys today, because I think it's a kind of a nice thing to look for. Okay. All right. So any questions out there? Has anybody used the hook or found the hook to be quite good? We use it actually on day trading as well as position trading. Now, also too, I wanted to share a stock that we found today in Yummy, NIO. And this seems to be coming off its bottom here pretty good too. So you've had, for example, one possible hook down here. Okay, here's your move up, there's your hook. All right, and your little bulb forming here before it goes. So that's kind of interesting. Notice here on this time frame, there was no hook indicating the top. So you had another high there. Okay, you had a little bit of a retracement, but not a major one. All right, so we kind of always look for those final hooks down, and that usually is quite a good thing for before a retracement trade. By the way, this looks like a pretty good stock. I'll share with you, one of my clients found this one. I think it was Alexander. I don't know if you're here, Alexander, right now. Yeah, you are. Okay, I think it was you that found this earlier. And I think this looks like a real good trade. So hats off to you for that. All right, so that's what I wanted to cover today. Any questions on that? Any questions? Feel free to chime in, or any other topic you want to cover. Everybody understand that a little bit on the hook? Okay. Doesn't work 100%, but the idea is if you're going to trade retracements, I find that when it does work, it sets you up pretty decently for a high probability success in the retracement trade. By the way, let me see if Jim is here today. He is not. Frank, you are here from the day trading room. So we actually took a trade on NG yesterday, and which is natural gas. And that trade turned out actually to be a really good trade, but we had to hold it a long time. So sometimes when you go into trades, if it hasn't hit your stop, you got to just stay with it. And then when it reaches your target area, you go ahead and start getting really close with your stops and start trailing out. All right, so nothing else? Going once, going twice? How about cryptos? Who's been able to get in? Did you get in early on cryptos? You know, we first recommended this when it was under 10 bucks. So now we're at 36. Okay. So hopefully you got into that. I do think more highs are coming on crypto, but I do think we're due for some profit taking. So if you're going to stay in this long term, make sure you have your stops at least far away. I put them under 25 bucks because you could get profit taking down to anywhere from 25 to 30. So you got to be a little careful on that. All right, Frank wants to look at gold. I'll just use the ETF for that. Okay, so on gold, all right, explain the gold movement. Okay, on gold, first thing you want to do is take a look at the long-term chart. Now, gold here, I'm just going to erase this right here for a moment. But gold here topped out in 2011, and this was a wave 3. Now, I don't have enough data, but it comes back down to here. So that was a wave 3, and notice that the owl here was the highest during that move, which confirms a wave 3. Then we had a multi-year ABC wave 4 correction, all right, that ended roughly in 2016. Then we had a meandering market and then a move off that channel into a wave 5, which is still underway. Wave 5 target zone is around 220, I'd say. Maybe it'll get a little higher, probably maybe 240, right in that range there. We have a green PTF, all right, so we're breaking out again, once again. Now, what's interesting to this is the first part of this target zone was just about hit here back in 2021 during COVID when everybody was afraid and went into gold. But the PTF triggered green, which indicated that that wasn't the final high. And so it looks like we're starting to take out that high. We're close to going above that now. And that will turn this yellow, all right, as long as the momentum going up isn't as strong as it was here. It doesn't look like it's going to be. So I would imagine more highs on gold. And I think probably, you know, this, we'll have to wait and see, but this looks like at some point, this will be a significant top on gold here when we get into the target range up in this area here, okay? That's kind of my target. The PTF will turn yellow once we breach here, and we're really close right now. So that's probably around the corner, but I think it's got a few more legs to go on that. So hopefully that explains that, Frank, on a long-term overall basis, and you can see a nice move up on the shorter time frames as well. Now, silver is another one. I covered this in Yummy today, but I'll cover this real quickly. We're looking at silver as a possible buy if we break above this red line, which represents a resistance area on this channel here. So basically, we're close to doing that, but it has not hit there yet. So hopefully we'll move up there. We've got a green PTF now on that, but I don't want to go in too early in case it remains a little range bound. You know, a lot of the influencers on YouTube had put everybody into silver when it was 26, but now it's pulled back. We did not go into it then because of the red PTF at that point when they were starting to recommend all these things again. So we've been out of silver right now, and so we're going to stay out until we get above that red line, but it could be coming in pretty close. All right, so I got a few more minutes here. Let's see, Alexander's got a few here. So does Frank. So let me just run through these. Let's see, CELH. And let's take a look and see. So these are also looking pretty good. My only thing on this one here is I like that NIO better because it's got a lot more room up. If you look here on the weekly chart, you know, if we go in for a trade here, we're hopefully trying to trade the hook, but we're starting to turn red here. All right, so I'm a little concerned about that. This may be a 4, we may have a 5, which is what the PTF is saying here. So you may have one more high to take. So I think you're probably okay on this, but also too, you got to get out when this hits the 5, okay? So it's not a bad one for a wave 5 trade for sure. And we've got some bullishness coming in on the short-term time frames. So I would do a half a trade size because of the red owl that you now have on the weekly, because that's a little concerning. I would have wanted that to stay green a little bit longer, but it may go back to green. But let's just take a look and see on this movement up. I'm just going to give you an extension run up here of where this thing could go. So, you know, I would say once we get into the 74, 75 range up to 91 range, that target, you gotta have your stops close, okay? So you're getting in early, but you do have a red PTF down here, all right? So it's a little super early, but I get it, okay? So you have you have a lot of green on the 60 minutes. So you could make that into a trade at this point to the long side, okay? So that's kind of the way I see it. If you want to be a little more conservative, you could wait for the owl to turn green on the 1 minute, but then again, prices may be too close into the target. So that's your call on that, okay? MARA, let's take a look at this one. We've looked at this one before as well. This one, of course, is already moved up. We have a target on this between 32, roughly 33 and 52. So we're close to the target now. All right, so what could happen here is you could get a pullback at any time, a little profit taking and put it back down into the $20 range. You certainly could get that. We're seeing a little bearish divergence building inside here, but you still have a lot of strength here. So I would continue to hold this. If I got to the target, if I got into the 32.5 range right in here, and everything is still green, then you have a decision to make. But you're gonna have to have your stop far enough away to survive any type of pullback before it goes up. So that's a decision you're gonna have to make. Now, if you wanted to take some profits off the table on this pyramid or any future pyramid that forms on the 60-minute, you could do that and then keep the rest on for the target on the long-term time frame. So again, also too, you could get out and get back in once it corrects if it does. So that's a possibility too. So I'm liking that. I don't think I'm going to recommend it since it's run up so much already. But if you're in it, you should be in pretty good shape on that. All right, and it looks like you are along on all those. DVN. And I got to tell you, let me just escape this for a minute. I got to tell you, this is the hardest part right now, I think, psychologically, because the tools are telling you to stay with the trade. But your logical brain is saying, oh, I got in really early around $10. I've already doubled my money. I should get out. So you're constantly fighting the way in which we're set up psychologically for profit taking, right? So, this is where it becomes, I think the trading becomes the hardest is when you're sitting in significant profits, but the tools are telling you not to take those profits. All right, I'm sure I relate to everybody out there when I'm saying that. So you've got to come up with a plan that keeps your emotions in check and yet at the same time keeps you objective. And so this is where scaling out some of your trades can help. If you lock in a little profit on some of the position, yet keep the rest of the position on, you're satisfying both hemispheres of the brain, so to speak, right? So, you've got to decide what's best for you, okay? The longer the trade, the easier it is to control those emotions of wanting to take profits too soon, so to speak. All right, and then let's go down to DVN. And I think that's the hardest part in trading and part of the part that takes the longest to master. All right, so DVN, we've looked at this before. We got a target of 87 to 114. We've got a green PTF on the weekly, giving us some confidence with that target based on the fib extension. And also, too, you have a break off on the bottom. You have no more active pyramids here, okay? You've had the hook down here, okay? So there's your hook, all right? Bullish divergence, and you're moving up here. So the only thing is that, let me just check a couple things here. It looks like this is actually the low here. All right, you have not had a pullback yet of any significance. So you're due for a pullback. So that pullback on the first leg up can be 100% of that first move up, possible double bottom, or, all right, if it ends just like a normal pullback, it may just end between 38.2 and 61.8% and head higher. but we're kind of due for a pullback. So we've got a little bit of bearish divergence here. I think you got maybe another high, maybe a hook here. I'm kind of thinking on this one, if you're in it, stay in it. If you want to take profits on it, okay, you can use this time frame to do it, use the pyramids here to do that. But if you're trying to get to this target, all right, you've got to have your stop under here right now. Wait for the pullback, wait for the surge back up, and then start moving your stop up. When you hit the target, that's when you really start to move it up, okay? So that's kind of the way I would play that. All right, Frank's got ETH to look at. So let's do that one. And this is, let's see, this is the CME for Ether futures. See if I have the data for that one, Frank. I think I do. Should. Nope. Guess I don't. Let me try that again. CME. Oh, I'm sorry. ETH. ETH. Yeah, no, I don't have the data for that one. It's kind of funny, but I wouldn't have it. But is there a equivalent? Check to see if there's an equivalent ETF for that. We can take a look at it that way. While you're looking at that, on Coinbase here, which is a crypto here, extremely well. It has done extremely well. Again, you got to anticipate a pullback at some point, but I still think it's going higher short term, okay? So I still think it's going higher short term. And then, of course, Blockchain is another one. That is, Blockchain is kind of actually, it's a little bit lagging compared to the other cryptos, which actually isn't bad because now you're getting a pretty good entry here. You got to keep your stop pretty low here for a little bit. Maybe under this ledge here is okay. I'd like it to break out of there. And then I think it's good to go, but it certainly looks pretty good. You'll probably get a little bit of a pullback. But again, our target for this is above 80 and you're getting in at 18. So that's not a bad one to also get into if you want to get into the cryptos. All right, so good. All right, very good ones to look at. And we'll do this again tomorrow during Stock Analysis Friday. Does everybody know about Stock Analysis Friday? We do that every Friday. And we're there for quite some time on YouTube. We're live on YouTube. We also go live on LinkedIn as well. And basically the purpose of Stock Analysis Friday is everybody brings a few stocks. We look them up just like we did here. And from that, we find those needles in the haystack. And we usually walk away with a good handful of stock trades to do for the following week. So it's really a great session. Everybody really is awesome there. And we have some really good picks. And, you know, we started out, we were there for about half an hour. Now we're there for sometimes an hour and a half because everybody's bringing more and more stocks. So the more you bring, the better. So definitely, if you can, try to make that. I think you'll come out with a few good possibilities for yourself on that. All right, so that's it for today. Listen, Happy New Year, everybody. Season's greetings. We'll see you next year, as the saying goes, but have a really good and safe New Year and enjoy the time of year. It's a great time to hang out with friends and family. All right, so I'll go ahead and end here, and we'll get this posted on YouTube a little bit later in the day. But thanks for coming. Great turnout today, and you guys just have a great New Year. All right, so take care, and we'll see you next week.